Good morning, ladies and gentlemen, and thank you to our last set of panelists for a really interesting discussion on the global economic situation at the moment. So our next panel of the day, I'm very excited for. This is something that's relevant in basically all aspects of our industry and very relevant in our lives. We're here to talk about envisioning the payments ecosystem of tomorrow. We have a great group with us here today. Our moderator, of course, is Ugne Buraciene. She is the CEO and country ambassador of payabl and the European Women's Payments Network. We have Claire Mack, the lead trading strategy manager at Worldpay from FIS. Jordan Lawrence, co-founder and chief commercial officer at Volt. Hanna Lindell, partnerships manager at Trustly. Nick Tucker, the head of financial services at TrueLayer. And Mehdi Tazi, the Chief Business Officer at Lean Technologies. Let's give them a big round of applause. A warm welcome to the stage.
Hi, everyone. Thank you for coming. Sorry? Okay. To start off, I would still like to do a small introduction so that basically you guys introduce yourself. I know that Rachel did a good job, but I think it's important that everyone knows how to pronounce your name properly, and just a little bit about your company I think would be very nice as well. Whoever likes to start.
Hey, Ugne, as I'm closest, I'll go first. Nice to meet you, everyone. My name's Nick Tucker. I'm head of financial services at TrueLayer. We're an open banking platform focusing on the UK and Europe, helping our clients with data and payments use cases around open banking.
Thank you so much. Hanna?
Hello, everyone. My name is Hanna, and I work with partnerships at Trustly. We are a pioneer in the account-to-account space, doing this for 14 years, and we are a global online open banking payment method that allows customers to pay directly from their bank account.
Hi everyone, Jordan Lawrence, the Chief Commercial Officer and co-founder at Volt. We are building a global instant payment gateway. We'll hear more about it.
Hi everyone, I'm Mehdi Tazi. I'm the Chief Business Officer at Lean Technologies, the fourth open banking provider on this panel, but actually focus on the MENA and Pakistan region. Great to be here.
Hi, my name's Claire Mack. I'm the lead trading strategy manager at Worldpay from FIS. Worldpay currently provides payment services to over 1 million merchants worldwide, and we mainly focus on acquiring, gateway, and various value-added services.
So actually a very interesting point today is that we have mostly open banking related payment service providers, which is a very, very nice change because normally, as we discussed also earlier, that it's kind of predominantly card acquiring or card acquirers. So, and I would like to start, let's say the first sort of a little bit more open question in terms of the real business needs of the clients and how do you think the payments industry is shaping by the actual business requirements and needs of the clients, and what kind of, let's say, critical business needs you see that the payments are helping, let's say, to achieve?
Maybe I'll go first there.
Yeah, go ahead.
Yeah. So I think if we start with the business needs of merchants these days, nobody wants to wait for their money anymore, right? So we're seeing the whole instant payments piece taking off in a big way. Open banking in Europe, of course, Pix in Brazil, two amazing use cases. And I think that, the main need of the merchants and PSPs in general are just they don't want to wait for their money, fair to say.
Yeah, I
That's
think it's
a very valid point, yeah.
super valid point. And I think it's not just from a merchant perspective and a consumer perspective, getting money into the ecosystem of the trading company you may be working with, for example, but it's also getting money back out. So, open banking and instant bank rails like faster payments in the UK, SEPA Instant in Europe, which more and more banks are participating in, give merchants the ability to do instant refunds or instant payouts straight back to a consumer bank account, which is great for the individual and great for the merchant as well, because it can lead to some really interesting behavior from consumers. I think security is a big thing as well. Mm-hmm. Merchants increasingly want secure ways of accepting payments, and likewise when I shop online or invest, I want to be able to send money securely. So we're seeing lots of changes with secure customer authentication in Europe, affecting card conversion rates, open banking luckily has two-factor authentication built into the payment flow, so I can use biometrics to authenticate a payment, which is great for me as a consumer, but also a merchant when it comes to reducing fraud and accepting payments securely.
And I think that is a very valid point because the money flow for the clients is a very important part of their business, and that's what basically makes them go. Anyone else wants to add anything?
Yeah, I agree with all the points that were just mentioned. One of the other key metrics that some of our clients are always tracking is how long does it take from account creation to account funding. That they actually track a lot, this metric, through open banking services. And what we do is we're able to instantly KYC the client and have them, through a single authentication, go on and make a payment. So we tremendously sort of reduce that time from account creation to funding.
Claire?
I think that, taking a step back, I think that especially looking at what's happened in the last couple of years, we've had a huge amount of more interest in this space. A lot more people are trading nowadays. People have been at home and have more time on their hands. So I think that recognizing that a lot of the trading platforms have changed their general customer base as well. So you've got these old school kind of traders who've been there for years, who are kind of used to wire transfers, and that's their status quo, that's kind of their norm. And then you've got new people coming onto the platform who've never traded before. They're used to buying, e-commerce, they're used to buying their clothes or their food online, and they would expect that same frictionless or seamless payments experience when they are buying food or when they're trading online. And that's why there's these sorts of trading platforms we see from our markets, and our merchants. They're trying to reconcile that difference between those two types of clients. And that's where I think things like real-time payments becomes, a deal breaker. And then also offering that kind of flexibility. So, if people generally pay with PayPal or people generally pay with Apple Pay, kind of giving them that same experience as they would across each of the sort of different areas of consumption.
I think to Nick's point, the payouts as well, and the security and the trust of the payment. Not only do you want the money in, but also you want to see your money come out again if you're making trades on a daily basis. Also, if you look at the retail industry, from a loyalty perspective for the consumer, if they're going to get a refund and the money comes straight back into their account on the same rails really quickly, then they're likely to shop again at that retailer, right? So I think it's a really, really valid point from the consumer and the merchant.
Yeah, and I think it's a very important point because it builds loyalty from the client side, right? And it's very important for the merchants as well. Sort of a next question that I want to also touch is about globalization in terms of payments, and how do you think that the financial service industry is actually affected by the globalization in terms of fintech space and the payments?
Yeah, I can empathize with merchants. It must be really difficult if you're a trading company with clients in 100 countries around the world, right? Each country is likely to have a unique payment preference that's very specific to that market, which can be very challenging when you're trying to streamline your cashier, create standard rules and journeys for onboarding new users and accepting payments. So it's super complex, I think, dealing with payment methods globally. Our friend from Worldpay can probably add a bit more context on that. But I think an interesting trend I see is open banking is, really expanding from the UK, where the OBIE did a great job creating standards across Europe. But we're seeing, regional developments in MENA with companies like Lean. We're seeing other regions. TrueLayer recently did a minority investment in Stitch, who are looking to bring open banking to Africa. So I think there's a big opportunity for open banking to bridge that gap and create a common UX that's beneficial for both merchants and consumers globally, as more and more banks, create APIs for sharing data and initiating payments.
Yeah, I also think that in line with what Nick is saying, that there's no news that globalization means a huge opportunity for all of us in the industry, but it has also led to higher fees. In Europe, for example, it's an estimation of $20 billion annually only in merchant fees. And we at Trustly, we know how hard this is because we are the only open banking provider out there operating across the Atlantic in both North America and Europe to reduce these fees. And if you think about it, globalization actually means localization. So lots of localization structured together. And globalization doesn't necessarily mean that you have to have the same product everywhere, but it requires high-functioning, localized payments that are connected together to remove the complexity of cross-border. Because it's all about quality over quantity, so merchants can really benefit from globalization. I mean, just think about the different schemes you have in different markets and regions. In Nordics, there aren't no instant scheme, and in Germany, for example, customers are getting charged. And in the UK, with fast payment, it works great. But all in all, you have to have a localized payment experience. Such as, for example, Trustly, we have our unique collecting and settlement model just to remove customer fees and maximize speed and deliver a local experience. So, I mean, even though globalization is a huge opportunity, it's also a lot of complexity around it.
Yeah, and I would say that its complexity is also on the side of the merchant because they have to navigate not only all of the, as you mentioned, different payment methods in all of the regions, but also the technology side. How does it work? The collection of the funds. So it's increasingly, complicated. Any sort of advice, maybe Claire, for also from your side, just to cover this topic?
I completely agree with what Hanna was saying. I think that globalization is really good, but it doesn't mean that you're going to have to offer the same options in every single market.
Correct.
And I think that we've got a lot of trading operators here who really want to expand worldwide, but they don't want to necessarily be a payments expert in every single market that they work in. And imagine if you go on to you offer every single payment APM, alternative payment method on your platform. You end up creating more friction by doing that because you're making your customers scroll through to try and find what they would like to pay with. So you really need to find what is the right mix for that market, and that's where I think that globalization is excellent, but without losing sight of what the local, appetite or general customs are for, and talking about things like APMs as well. We were talking before, now in a lot of markets they're not alternative anymore. If you look at somewhere like the Netherlands, Ideal has now become the biggest payment method. And now, I think in 2021, wallets were 50%, so all types of APMs and wallets now make up 50% of all online transactions. So now we're not talking about something that's alternative anymore, but we're talking about an extremely fragmented market, which is based on local choice. And I think that's really important that whenever you go into a new market, you have that opportunity to be able to choose, but with the guidance of the payments partner who knows what is going to really sort of be the best sort of booster for that particular market.
Correct, and I think it's local payment methods, not alternative payment methods.
Exactly.
If I can add the sort of regional view here, we recently raised a healthy round, and most people come to us and are you guys going global now? And we say no, we actually want to be very hyper regional. And we've recently actually also been approached by a couple of global payments players who are looking for connectivity in MENA. But if you're a global player in the open banking space, for example, and you come and you look at the MENA region, you have about 20 countries, very fragmented markets, each with a different set of regulations, different set of infrastructure. The open banking frameworks are very different from one market to another. You have market-driven markets, you have regulator-driven markets, you have markets that are also going the UPI stack, like India. If you look at Egypt, they recently developed the IPN. So you have every single country has a very different infrastructure, and I think the reason why you need to be hyper-regional is you're better off focusing on product depth and innovation rather than sort of spread yourself thin and try to have just a lot of global coverage. Global coverage is important for the merchants, but I think open banking players are better off just partnering with one another.
It's a really good point. And also, if you look at Volt's platform, we process for PIX in Brazil on the Brazilian real, but also all across Europe, right? It's the currency piece, which is pertinent to this event, from the FX part for the merchants, it's still like for like. So there's no interoperability around the currencies, right? So I think that's also a challenge to overcome. And to your point, that is why we should be sticking local and providing for those currencies more than anything, right? Because you can't swap it around. You see some innovation on the blockchain now for getting sort of those currencies, making a stablecoin, minting stablecoins, and actually taking them across into different markets, and then the fiat off-ramp via those stablecoins without the risk. And I think there's been a panel on that as well, actually. So that's good. But yeah, the localization, I think there's a currency issue at the moment.
So actually, it's quite interesting that we almost touched already about the next question, which is about global open banking platform, right? So how do you actually see? We kind of touched a little bit of, like the complexity of the local and how basically it can be divided or how it can be joined. But do you realistically see steps of global open banking platform as a whole, or what would it take to get there?
Yeah, I think it's a really interesting question. I used to work at Trustly with Hanna, and during my time there, we acquired a Finnish business, which was great for merchants because we were able to expand a kind of Nordic payment method from Sweden into Finland. We acquired a North American business, and it was super popular with merchants wanting simplicity, one API to be able to accept payments and manage foreign exchange internationally. I think what you probably see from the lineup on this panel is there's lots of regional players. TrueLayer do a fantastic job, and we're market leaders in the UK, processing over 50% of the open banking payments volume there, more recently expanding into Europe as well. But then you have regional providers in North America, certain country-specific providers. Swish, perhaps not open banking, but that's a very good local method in Sweden, for example. So I think over time, what we'll probably see is more M&A activity with companies merging so that they can serve truly global merchants with a solid open banking offering across the world where that merchant has consumers. So I think over time, we'll probably see more consolidation. But for now, what you have is really good hyperlocal, national and regional players that specifically do a good job in certain parts of Europe, North America, rest of the world and so on.
Yeah. Okay, anyone else?
Yeah, to speak to that, I think back to the merchant need, what they want is a single point of integration to the world of instant payments,
Exactly.
right? Open banking, and that is Volt's vision. So we're plugging in those 60 countries around the world that actually have an instant payment option, the API-driven bank-to-bank payment solution. And I think that is going to be partnering up with people like yourself in each region, regional specialists, to offer that, again, single integration to merchants and PSPs, right? So as the whole thing becomes a global play, merchants don't care who the provider is, they just care about the functionality of the service, right? And I think that is what we're doing.
Correct, and also it removes the complexity from the merchant side, so they don't have to go and then integrate all different, basically, payment providers to do that for them as well. Anything from your side, Claire?
I mean, I can just add to Jordan's point and also Nick's, I mean, it's a very relevant question because Trustly supports and work hard with global and standardized initiatives. But in the end, our view is that open banking shouldn't just be about connection to banks. It should be a full upgrade of traditional debit payments because, I mean, a single global open banking initiative won't solve the complexity around cross-border payments, because if you take a step back and think about what really is a cross-border payment, it's not only execution and initiation, but there's so much complexity around it. You have, I mean, with the different schemes in different markets, you have FX rate and conversion to deal with. So open banking is more of a component and enabler. But in the end, and as Jordan said, you don't only want the functionality, you want the successful outcome. So to have that successful outcome, for example, what Trustly is doing is that we have a unique setup in 3 ways to provide you and merchants with that. So that is, we are connecting to open banking APIs, commercial APIs, with our own proprietary integrations. Plus that, we have our own unique bank collection network across Europe, so we can send funds intra-bank. And what that means is that Trustly has receiving accounts in the same bank as the customer is paying from. So we're sending funds from bank A to bank A. And then on top of that, we're also, of course, connecting to instant and other schemes as well. But in this way, we can provide you with successful outcomes by dynamically route the payment in the fastest way possible, just to maximize speed, to remove customers' fees, and so the customer can actually pay in their local currency, while you as a merchant gets your funds settled in your preferred currency.
Thank you. Yes, Mehdi.
The one thing I would add here is, if you think about open banking as a set of regulations, I do not see globalization in the set of regulations. I think every single country will have different types of regulations. We're seeing it in the region. At Lean, we very much see ourselves as the evangelists of open banking. We travel to countries, we go speak to central banks, and we sort of tell them about the benefits of introducing open banking regulations. During our last trip to Egypt, we launched in the UAE, we launched in Saudi, very well banked countries, right? So open banking makes total sense here. But if you go to Egypt, tremendously underbanked country, we have about 40% of the adult population banked in Egypt. You have 18 million bank accounts for 21 million wallets. So wallets are actually much bigger than bank accounts over there. And so the central bank's mission is very much about focusing on financial inclusion, but your traditional OBIE sort of framework will not work over there. So instead, they actually focused on introducing the IPN, which is very much similar to the UPI stack in India. The reason for that is they wanted to promote the rise of wallets. They wanted to promote access to digital finance, which will not happen through traditional banking. They also wanted to promote the interoperability between wallets and banks. This is what they focused on. But if you think about the value add of an open banking player, it's very much similar to sort of the power outlet analogy, right? So you're very much sort of, you'll have different plugs in each of these markets, and we're very much the converters. I do not see the regulation being sort of similar across markets, but I see sort of those open banking players very much being sort of that super API and those converters for the markets.
So more actually technological development than the paytech development, rather than changes, let's say, in the regulatory environment for surrounding open banking. Cool, really good. Anyone else? No? Okay. So moving on to another question, I would kind of really like to pick your brain a little bit about sort of what you see as the up and coming or new trends in the payment technology. It can be related to open banking, or it can be related to card acquiring or anything else that actually benefits, the clients, and how these changes shape basically the payment space.
Yeah, I think something we're super passionate about at TrueLayer is variable recurring payments in the UK. So we see that very much as open banking 2.0. The idea is you're able to initiate a bank transfer using the normal open banking flow, but also agree to a mandate to enable merchants to pull funds from a set amount or up to a certain limit on a monthly basis or 90-day basis. So that's fantastic because it really removes the need for the payment experience to be at the front of mind of the consumer, and money can just move invisibly in the background almost, which is the ideal goal here. You don't want friction in the journey where users are having to think about initiating a payment and how that money's moving, but they want a secure way of allowing the movement of money on their behalf in the background. So I think that's going to be a really interesting development in the UK. Outside of open banking, I was involved in a crypto project in my last role. So I'm really passionate about crypto and stablecoins specifically for underbanked or emerging markets where people perhaps don't want to hold local currency because it's very volatile, but it's very easy, unlike opening a bank account, to open a wallet, hold stablecoins, and then transact globally using stablecoins. So I think those two things in complement are probably going to be the future. I want to pay easily from my bank, and I want money to move out of my bank account seamlessly, but I'm holding some of my assets in crypto as well, and I also want a simple, secure, easy way of spending crypto or digital assets as well.
I think that another point on there, I think it kind of, probably some of my friends at Open Banking can talk to this as well, but sort of streamlining KYC. I think that especially within the trading space, we know how arduous that onboarding process is for the end client. You have 7 pages of information about how, what's your salary, what's your expectations, all these questions on, what do you understand what this means? And I think that some of that can really be sort of targeted and streamlined through things like, the open banking kind of, data that they can utilize to really sort of preempt those questions or pre-answer those questions. And that can also be done through partners as well, through KYC partners. And I think that that's something that taking out that stress on that single, and we were talking about it with Hanna yesterday, like having that person deposit into their account within 5-10 minutes on opening that page for the first time really creates a sort of a journey or an experience that they're likely to repeat on multiple occasions versus, you have to wait to, or you don't have all the information to do the KYC or whatever, and then you have to come back to it later. You're much more likely not to have a sort of a loyal customer after that.
And I think, just on top of what Claire is saying, and both Nick as well, but for the customer, it's all about paying in a simple and convenient and secure way. And for the merchants and clients, as Claire is saying, it's all about removing the complexity of operational difficulties, reduce cost, and improve revenue and the bottom line savings. But I think, in terms of also what Nick is saying, there's a lot of trends and developments happening out there. I mean, we have the blockchain, recurring payments, and invisible payments. But our view is that, if there's something you really need to think about for the next 10 months, it's that open banking is shifting from being an idea to becoming the most common payment method in the checkout. So, open banking is just at the beginning of this huge exponential growth curve. And 2022 will be the year when open banking will reshape financial services for good.
No, I think it's an amazing point. I think it's driven by consumer preference as well. When I was working in this industry 5 years ago, account-to-account payments were really popular in Germany, Netherlands, Sweden, but the needle wasn't moving in the UK. But more and more these days, when I go to pay off my Amex, I do that using open banking, for example. When I donate to charity on a Just Giving website, I do that using open banking. So I think it's really capturing the zeitgeist and becoming front of mind for consumers. And to Claire's point, something that we're kind of launching beginning of H2 this year, and we're in private beta with a couple of clients that are at the Expo today, is a product that enables a user to come to an FCA-regulated trading site, make a deposit using open banking. We collect data using AIS from open banking APIs and premium APIs as well, enrich that from a third party, and provide the operator or the vendor, the merchant, with all the information they need to register that new trading client in a very secure, compliant, seamless way. So you're removing the need for that individual to go through a lengthy sign-up process, send bank documents, things of that nature. So you're making it super convenient for someone to invest. And I think, as Claire was saying earlier, one of our clients is Free Trade. They saw a huge spike during the kind of Wall Street bets and meme stock investing period. So if you want to capture the digital natives, the under 35s, acquire these new type of users, you want them to be able to invest when their attention is grabbed. And I think open banking provides some, great secure ways of improving the user journey for first-time investors who may just abandon the sign-up process or abandon the cashier if a payment method they like isn't there. So that's a really exciting development I see in the future as well, and the not too distant future.
Yeah, absolutely.
Yeah, I think sticking to the point, the question in terms of the future of technology, the whole stablecoin piece is really interesting. As I was mentioning earlier, just to get funds in different currencies across into different regions, right? So people are going to be able to have their money in a stablecoin wallet and actually make yield on that as well. So if a merchant actually has some of its money in digital assets, they're going to make money on that money as well, rather than just having it sitting in the bank and losing it, right? So I think to the future of certainly this year and next year, you're going to see open banking merge with blockchain technology for instant payments and global FX.
Okay, perfect. That's very interesting. Moving on to the next question is actually kind of directly related to all of you and your companies. And how do you help, let's say, your clients navigate in this sort of difficult regulatory, let's say, scrutinized, environment? And what do you believe, is the benefit that you can provide also to your clients?
I can start. So what Trust is doing is that we help financial services adapt to regulatory environments and be more efficient, improve payment operations by reducing the cost and eliminate fraud. And we do this in 3 ways. So first off, we have embedded authentication methods such as fingerprint and Face ID for a convenient and frictionless payment experience while eliminating fraud. And as Nick was mentioning, the SCA card is on the rise of just seeing a huge drop in conversion. And then secondly, we also allow for better identification and automated affordability metrics just to get a better understanding of your customers' financial position, so you don't have to do all these operational difficulties, such as passport scans or uploading of a bank statement. And then thirdly, we're also reducing scrutiny on payouts. We've seen that the financial service industry hasn't been the fastest of paying back funds to the customers, especially due to legacy payment methods. And what Trustly is doing is that we provide with instant automated payouts to deliver a great experience and reduce scrutiny.
Sure. Mehdi?
I wanted to add a bit of a regional perspective. Again, I think, for us here in the MENA region, we're probably 5-10 years behind the Europe or the US, and we're still predominantly a cash-based society. There's a strong cultural bias towards cash. It's more than 50% of payments in the region. And so if you think about certain industries such as remittance, MENA, or the Middle East as a market, is actually the largest remitter market in the world. The UAE is the second largest. UAE to India is the second largest corridor, just after US to Mexico. Mm-hmm. So it's a pretty important. And if you think about sort of the remittance companies here accepting cash, there's real AML issues with that, right? They cannot really track who's sending the money. And similarly, when you send a manual bank transfer, which is the current method of payment here, you cannot verify that the person, it's really cumbersome for the merchant to verify that the person sending the money is actually who they claim they are. Through open banking, again, because it's payments supercharged with data, you really have that ability to verify that the person actually sending the money is that same client of yours. You can have a matching algorithm to sort of match the two names. So from an AML perspective, I think the move to digital payments, the move to open banking will be a big inflection point for this part of the world.
Sure, Claire?
I think it's really interesting to look at it from the other side, so from the industry side, and look at it from a trading perspective. And we know that this is a notoriously difficult market. In the last couple of years, regulation has really hotted up so much, so that we have a lot of trading platforms have simply had to, completely revolutionize the way that they were doing business. And especially with the FCA, ESMA, everything's changed. And we've seen a lot of merchants having to look at different business models, looking to offshore a lot of clients and, whatever. And I think that from our perspective, we also try and understand the market as well as we can to give the best advice into expansion for that particular customer, So from our side, we try and get we get at least 50 legal opinions for each market when a new merchant is trying to enter. And then from the other side, we really utilize our knowledge across various verticals to try and preempt what the next regulatory requirements will be for trading. So for example, you look at gambling at the moment, we have a lot of merchants who are looking into things where they want to geolocate the end location of their client, their consumer. And they're using third parties to do that. And that, looking at how the regulation has changed within trading as well, that could potentially, I'm not saying this year, next year, that could be something that's required. And maybe is something that would be a really good for very sort of, hot regulatory sort of compliant companies. They may want to include that in going forward. We really want to ensure that our consumer is in the markets that we are serving in the right way. So those are the sorts of things that we try and help with as well.
Correct.
To her point, it's completely forbidden here in this part of the world.
Sorry, we mentioned that word altogether.
No iGaming for us, no betting.
But some people don't even know that, right? So this is exactly Volt's strategy, right? We're just trying to consult the consumers and consult the merchants what actually works and what doesn't work. And that's all you can do with a new payment method as well. Because if nobody knows anything about it, they're completely trusting you to be their advisor, right? And Volt sits in the middle as this single point of integration to the world of open banking instant payments. You can see we have all that data on what works and what doesn't work. And that's really important to be able to go to the customer and go to the merchant and say, hey, look, this is a whole new method in this new region. This works today, but actually tomorrow it doesn't work because there's a new regulation has just come in, which has made the whole thing illegal here. So I think the consulting of the merchant is massively important. And that's how things have changed over the years. the schemes sort of, it's a card scheme, right? Visa, MasterCard, okay, fine. New payment methods come out. Merchants really are starting to rely on the people that are selling them the payment product, which is a whole new thing, right? Actually trust in the salesperson or trust in the company that's selling the products as their consultant as people move around the world. I think that's really exciting where the trust has shifted.
It's absolutely exciting, and also I could not agree more, because we are also predominantly a card acquirer, but we are looking and we are adding more and more alternative payment methods because we also see the needs. And actually a very good point that you touched upon, right? Because all of the industries that we service as acquirers, as payment service providers, have let's say certain, let's say, peculiarities in regulatory restrictions and things that that they can do and cannot do. And if we are not there, for them to give that right kind of information, the right set of tools and right set of payment methods, then we are already sort of way past our expiry date.
Yeah, definitely. And just touching on kind of Mehdi's point, I think data is a really interesting angle. One thing we do is we enable consumers to link their bank account with their trading app, for example. And that's super interesting because they can consent to share information stored within their bank account, which can provide the merchant with the opportunity to really understand who their customer or consumer is, which is interesting from a KYC perspective, but it is also interesting from a marketing perspective. I was speaking to a client that uses data from the consumer's bank account. Every time they spend money at McDonald's, they get a notification of that by ingesting the raw data from the bank statement, and they pull money from their bank account to top up their savings account. So there's some really interesting opportunities to build super tailored personal financial advice or investment, saving, trading products based on information that you're able to uncover on your clients from within their bank account, which is very interesting.
It is very interesting indeed, and I'm a super fan of open banking, and I'm just really glad that we're having this conversation, and to also to sort of fill the audience with everything that is happening. Actually, slightly changing the topic, but continuing the theme, sort of in the changing landscape of the payments and how the clients are more inclined to use and actually have to use alternative payment methods. But how does that actually affect fraud and fraud management? Because if we talk about card acquiring, for us, it's very sort of straightforward. We know the process. We know how the whole process is handled, the disputes and everything. But in terms of the light of the new payment methods and open banking, how do you see fraud prevention, and what actually the clients, the merchants in this case, should know about that? What are kind of sort of downfalls and things that they should be looking at for?
This is a really interesting point because I think when open banking first came around, everyone was saying, "Oh, this is the end of fraud."
Yeah. Exactly.
And of course, that was not the case at all. We've actually, I think Volt has built probably the first anti-fraud product for open banking. We called it the circuit breaker, all about electric, of course, as you say. And yeah, so we were seeing quite a lot of fraud in the beginning, like this kind of so-forth-style friendly fraud. So there's tools that we've built to eliminate that. Well, not completely eliminate, but reduce the risk, let's say. But it's a really, really interesting topic. And I think actually fraudsters are always one step ahead, it seems, in this market. But the traditional kind of card frauds, like if you look at the airline industry where someone was able to steal somebody's credit card, buy a flight, and then resell it on the black market, of course, that kind of thing is eliminated. And specifically in this space as well, where we're all here, credit card fraud has impacted this industry massively, and I think if people are going to pay with an open banking option, it will be reduced a lot, but it's by no means completely gone, right?
Very nice.
Yeah, and I think just adding to what Jordan is saying is that it's not completely gone with the open banking payments, but what it is that with this embedded authentication methods, such as fingerprint, Face ID, it removes and eliminates fraud. And also what Trustly has built during these 14 years we've been around is that we have a unique model with where we both initiate and collect the funds. This means that we're covering the whole payment journey to monitor and making sure that the funds actually settles, and not only initiation service that starts the initiation and then they have no idea what's happening with the funds. So I think you have to have a collection model to actually follow the payment journey all the way.
Yeah, and I totally agree. And also, I think from one interesting sort of thought that also I'm taking away from, let's say, the clients, and we talk to clients, about open banking and Trustly and all different sort of, payment methods out there, is that actually I think there is a lack of understanding, let's say, the differences between the card acquiring and the open banking, and let's say the benefits, and also, let's say, some of the peculiarities also that the open banking has. And I think it's a very important point that, we as service providers, that we actually educate, the merchants on that.
Yeah, I think you hit the nail on the head. You see in all the material from an open banking provider, no chargebacks. Now that's true because there is no chargeback mechanism, but it can be slightly misleading for merchants because they see no chargebacks and they think no fraud. So we've discussed there's secure customer authentication in the flow. The likelihood of fraud is much, much smaller, but there still can be instances where funds don't settle because a bank pulls a transaction to do further KYC, or you can have organized fraudsters that try and find a weakness in the banking infrastructure. So I think what you kind of need is a really honest and open dialogue with your partner providing those services, who has good relationships with banks and a strong support team. So in instances where there is fraud or money doesn't settle, they can liaise between you and the banks involved in the value chain to quickly resolve those issues, so your support team isn't getting harassed by upset individuals or having to deal with fraudulent transactions. So it's a massive improvement, but the devil's in the detail, as you say, and it changes a lot country by country, bank by bank, market by market. So you need open and honest dialogue with your provider to really make a success of it.
Anna, your point, the collection model is absolutely right. You're in the money flow, you can see where the funds are going at any time, you can start collecting that data as to where it's going wrong or where the fraudsters are stepping in, right? And I think that's something you guys are really good at.
Yeah, and to Jordan's point, I think it's really interesting to be able to share data from within subsets of verticals and merchants. So you can say, actually, the likelihood of non-settled funds, or this is the data we're seeing for trading companies. And that helps the merchants improve on processes perhaps on their end, to get those numbers down. So the sharing of data and insights is a really powerful tool as well.
Perfect. Sounds really good. I would like to sort of wrap up the panel discussion. I think it was really interesting for everyone involved. But one last question, and sort of a practical question to all of you, is let's just practical tips for the clients in the financial service industry. How can they really navigate, all of that we discussed? What are the first steps, that they should take, and how to? I know that we covered aspects of it, but just sort of, very condensed, tips for the clients out there.
I think from Trustly's point of view, it's all about innovation of the payment experience, while being at an efficient scale and deliver localization. Because to achieve a great payment experience, you have to have end-to-end localization, because that's in the end what really matters. And I mean, for Trustly, for example, I'm coming back to our unique model, but it is because we have this unique different set of connections. So, for example, one of the major banks in the Nordics have downtime at the same time every night. So what Trustly is doing is that we dynamically shift to our own proprietary integrations during this downtime to maximize conversion. So that's just an example of how localized you need to be.
Okay. Anyone else?
I would say a tip to the industry, merchants and PSPs in general is don't just hop on the next payment method that comes along because it's all in the news, right? Open banking expectations must be managed, okay? So you have to ask yourself, what do you actually want to get out of this payment method, right?
Correct.
People's expectations are it does everything, there's no fraud, there's no chargebacks, the list goes on.
Does it have a coverage and all that?
Yeah, all the coverage is there, but actually work out why you want it. You haven't just seen it on a bit of paper or something, and you must have open banking payments. No, and it's going to be the same with blockchain, right? So people are going to start talking about stable coins this year, a huge amount, blockchain payments, crypto payments. Do you actually need it? Do you actually want it? Maybe you don't. Maybe it's not good for you guys to have it at all. And if you do, work out why you want it so you can go to the providers with a really open mind and say, okay, I want this solution because of this, and actually you'll be amazed how much can be tailored around each PSP or each merchant in a specific market, right? So that would be my advice, probably.
Yeah, I would build on that. I'd say, ask your PSPs, ask the like of Worldpay, ask other merchants, speak to everyone on this panel, because you're spoilt for choice when it comes to open banking and payment providers. And there's pros and cons and nuances between different providers, and you really need to go into the detail to understand what's going to be best for the objective of your business that you're trying to solve, and maybe for your geographical region you focus on. So do your due diligence, get into the detail, speak to as many people as possible, and you'll find a really good, reliable partner for your business.
And I think on that point as well, I think that everyone thinks that payments is sort of vertical agnostic, but it really doesn't have to be. And I think that it's really important to, when you are trying to find a payments provider, to really test them with those sorts of questions so they understand that industry and make sure you're talking to the right person, because that customer experience will be completely different to another, to another vertical or, in-person payments. And they really need to be able to know that to understand your industry and give you the right options so that you can really boost your customer experience in the end.
Yeah, I guess on my end, we're very much in a nascent fintech ecosystem here in the region. And when people hear about open banking, they get very excited. They see a million of use cases out there. I think our advice oftentimes is focus on your biggest pain point of your business. Start small. Let's define a use case. If you have problem with pay-ins, focus on your traditional payment. If it's the focus is on data because you have too much, fraud or AML risks, focus on that part, or KYC. But oftentimes, sort of trying our merchants are resource constrained. If they try to focus on too many things, sometimes it becomes overwhelming.
Cool, thank you so much. So just sort of an overall, just to focus, research, and choose the right providers that fit the needs. And also from my side, the advice is also for the merchants to really have dedicated teams that work, I think, with payments, which I think is very important, and improves and helps a lot to build, what they need for the businesses. Thank you so much for the panel discussion. Thank you.
Thank you.